Hope you guys are having a great day. I just wanted to jump on here and do a quick video about hedging your bets. I have a whole bunch of other topics I wanted to get into, but considering what's going on in the world and the pace at which things are changing, I think hedging your bets is a good topic. Now, this might seem obvious to some of you. To some of you, this might seem something interesting or novel, but I just want to lay out a little bit of a framework for a strategy. Basically, when you're invested in anything, you want to hedge your bets. Now, I always had a difficulty understanding hedging your bets because when you hedge your bets, it sounds like you're going to end up even. If this works out, that won't, and if that works out, this won't. So how do you actually profit? And I think this case in point that I'm about to discuss is a good example. Right now, the stock market is not very happy if you're paying attention to your portfolio over the past couple of days. Unless you got like some kind of miracle going on, it's just not too pretty in a small little, sample size. Now, if you were to have a mutual fund or some other account where you hold precious metals, you would probably see a hedge on your bets that while your stocks are going down, you don't really need to be that concerned, because if they were to flop, you would still have a type of investment that would be able to hedge your concerns. Now, what this does is it makes you be able to not have to completely get out of the market. If somebody thinks the market's going to fall apart, collapse, there's uncertainty and fear, they are just going to take their money out of the market, right? And you can't make money if you're not invested. But if you have a hedged bet, for example, you start investing or you have an investment in precious metals, as I'm a big fan of, or something else, then you can continue to trade around your positions. I know this is going to sound strange, knowing that even if it all flops, you will still have something coming in from another investment. So it kind of looks like this. A person can have stock, see that something in the world is happening that is not going to be favorable, get out, or stay in the stock, maybe not trade around his positions, trade a little less, or just let it stay stagnant. But now, with this hedge bet, even if that all falls apart, let's say you're into the market for 50 grand and your 50 grand in the precious metals just explodes up to, I don't know, 400 grand, 500 grand, you're not really going to be thinking about that 50 grand you lost. Now, the last piece of this to consider is that you, as a regular private citizen, if you're doing something else for a living, you don't need to be in the market. You could just take your money out, but you're not going to build wealth that way. But you have financial institutions, financial investors, market makers, all kinds of people that have to make money. They don't have another job. This is their job. So if you think with that mindset, you'll realize there has to be money to be made. And the question is, how do you make it? You're never going to get rich pulling out before the disaster happens. You might save yourself, you might be, in a safe position, but that's not the way to build wealth. In fact, they say the most wealth in the past century, or maybe ever, that was built in America happened right after the Depression. People who had a couple of dollars together, they would look for the bargains, which is something we're going to talk about. But for right now, in preparation of what could be a pretty hard downswing, hopefully not, God bless us all, I don't know if pulling the money out of the market is the right move for me. Again, I'm not a financial advisor, and this is all just conversation. But the way I look at it is to hedge in a position where you can still trade around this. And if it works out, great, you can build your portfolio larger in the stock market. And if it doesn't work out so well, you have something somewhere else that can really take off, whether this stays stagnant, takes a few years to come back, or whatever. So basically, in short, if you hedge properly, it's not going to end up balanced. It's going to end up in a position where one side of your hedge you can work around and build into wealth, while the other one might not be such a home run. Have a great one. God bless.